Welcome back to Stock Market 101, the podcast where we keep you ahead of the curve in the ever-changing world of the U.S. stock market. I'm your host, and today is January 9th, 2025. We've got a lot to cover, from today's market highlights to what traders and investors can expect as we head into the next trading day. Buckle up, because this episode is packed with insights you don't want to miss. Let's start with the big picture. Today, the major indices showed mixed performance, with the S&P 500 eking out a slight gain of 0.2%, closing at 4,890. Meanwhile, the Dow Jones Industrial Average dipped by 0.1% to end at 35,560, while the Nasdaq Composite outperformed, rising 0.8% to close at 15,320. The tech-heavy Nasdaq was driven largely by a rally in semiconductor stocks, which we'll touch on in just a moment. For context, the broader market sentiment has been shaped by this week's key economic data. This morning's release of December's Consumer Price Index confirmed a 3.2% year-over-year increase, slightly below the consensus estimate of 3.3%. While the headline number showed signs of easing, inflation, core CPI, which excludes food and energy, remains sticky at 4.5%. Investors are now grappling with the implications for the Federal Reserve's next move. Futures markets are pricing in a 60% chance that the Fed will hold rates steady at its next meeting, but a strong jobs report on Friday could shift that outlook dramatically. More on that later. Now, let's break down some of today's sector action. Technology was the clear winner, with the sector up 1.1% overall. The standout performers were semiconductor companies like Nvidia and AMD, both of which gained over 3% after an upbeat forecast from Micron Technologies during their earnings call last night. Micron's CEO projected stronger demand for AI-related chips heading into the second half of 2025, which sent ripples through the industry. Energy stocks had a tough day, falling 1.4% as crude oil prices dipped below $70 a barrel for the first time in 2 months. The decline came after the Energy Information Administration reported an unexpected increase in U.S. crude inventories. Chevron and ExxonMobil both closed down more than 2%. Consumer discretionary stocks also faced pressure, falling 0.8%. Retail giants like Target and Macy's struggled as analysts cut their Q1 forecasts, citing weak holiday sales. On the flip side, utilities and healthcare stocks held steady as investors sought out safer bets amid economic uncertainty. United Health Group, for instance, rose 1.5% after announcing plans to expand its Medicare Advantage offerings in several states. Let's zero in on a couple of companies making headlines today. First up is Tesla. The electric vehicle giant rose 5.7% after announcing record deliveries for Q4 2024, totaling 520,000 units. Analysts at Morgan Stanley upgraded the stock to overweight and raised their price target to $350, citing strong demand for the company's new Cybertruck. Meanwhile, Apple saw modest gains of 0.6% as whispers of a new product launch circulate. Industry insiders suggest that Apple could unveil its long-awaited augmented reality headset during its March event, which has tech enthusiasts and investors buzzing. Lastly, let's talk about Rivian. The EV startup dropped 8% after announcing a recall affecting 12,000 vehicles due to potential software issues. While the company reassured customers that the problem could be fixed via an over-the-air update, the stock's sharp decline reflects investor concerns about reliability and execution. Now, let's turn our attention to tomorrow and what we can expect. Futures are pointing to a cautiously optimistic open, but keep an eye on the following factors that could sway the market. First and foremost, tomorrow's weekly jobless claims report will be under the microscope. Economists are predicting 230,000 new claims, up slightly from last week's 225,000. A higher-than-expected number could ease fears of additional Fed rate hikes, while a lower number could have the opposite effect. Earnings season is also kicking into gear. Delta Air Lines will report before the bell, and analysts will be watching closely for commentary on travel demand and fuel costs. In the tech sector, TSMC, a key supplier for many U.S. companies, will release its quarterly results overnight. Any surprises there could impact chip stocks tomorrow. Additionally, keep an eye on Treasury yields. The 10-year yield closed today at 3.8%, down slightly from last week. A continued drop could provide a tailwind for growth stocks, particularly in the tech sector. Lastly, geopolitical developments could be a wild card. Ongoing tensions in Eastern Europe and the Middle East have the potential to rattle markets, so stay alert for any breaking news. Before we wrap up, let's take a couple of questions from our listeners. The first question comes from Sarah in Chicago. She asks, with inflation cooling, is now a good time to buy into consumer discretionary stocks? Great question, Sarah. While cooling inflation is generally positive for consumer spending, you'll want to be selective. Focus on companies with strong balance sheets and proven pricing power. Names like Home Depot and Starbucks come to mind. Our next question is from David in Dallas. He asks, are bonds a better investment than stocks right now? It depends on your risk tolerance and time horizon, David. Bonds are offering more competitive yields than we've seen in years, making them an attractive option for conservative investors. However, if you're willing to stomach some volatility, stocks still offer the potential for higher long-term returns. That's all for today's episode of Stock Market 101. Thanks for tuning in, and don't forget to subscribe so you never miss an update. If you found today's insights helpful, share this episode with a friend and leave us a review. We'll be back tomorrow with more market news and analysis to keep you informed. Until then, stay sharp and trade smart.